Okay. Paper 2, October, November. Go. Please read.
Gemini Theater is a private limited company
What are you
fully.
reading?
Yeah, this is what you said.
October, November, paper 2.
October, November. I've just skipped this. Energy Solutions. Right.
Yes, please.
AS is a public limited company in Country X. The business was set up in 1980. For 25 years, most of the AS revenue came from coal mining. Although AS still owns many coal mines, the business now specializes in hydraulic fracturing, known as fracking. This is a process used to extract gas from underneath the ground. The government of Country X encourages firms like AS to grow. The growth of AS has led to economies of scale and lower unit costs. AS considers the effects of fracking on all the stakeholders of the business. Figure 1.1 is an extract from a recent newspaper article about fracking. Despite the complaints from some external stakeholders, AS plans to increase the number of fracking sites in Country X. This will require AS to buy a license from the government of Country X. Each license costs $50 million, and AS will require both internal and external sources of finance to fund this purchase. AS employs over 1,000 people. Every worker benefits from a profit-sharing scheme, as well as their basic pay. A, define the term revenue.
When we talk about revenue, we're talking about the amount of money a business has received from the sales of its products or services.
Yeah.
That's
The amount of money in the business.
a business receives for selling its products or services.
Okay. 2, explain the term unit cost.
So when I talk about unit cost, this is the amount you have to pay for producing a unit that output. Unit cost. Is it clear?
Yeah. Refer to table 1.1, calculate the difference in dollars received by each director and each manager from the profit sharing scheme.
So we'll go back to each director. We have the profit for 2019 was $12 million. Each director share of profit is 0.25. Each manager share of director of profit is 0.1. So for the directors, it is 0.25 over 100 multiplied by 12 million. That gives us 0.03 million.
Okay.
Therefore, the managers, it is 0.1 over 100 multiplied by 12 million, and that gives us 0.012 million. So the difference between it is 0.03 minus 0.012 million, and that gives us 0.018 million. Clear?
Very clear.
I worked it out anyway, so you see
it. Explain what disadvantages to AS of using a profit sharing scheme.
So when you use profit sharing scheme, the first thing is that it might increase your cost. It might increase the cost of the business and therefore makes it less competitive. So if you are sharing all your profits, sharing profit means you're not keeping money. You're spending all the profit shared. You are sharing all the profit.
Okay.
That means you might be incurring more cost at the end of it all. Yeah. So if you are incurring more cost because of you sharing all the profit, you might become less competitive as a business. That was the first point. The second point, okay, I think they said 1 point, right? 3 points, right?
Yeah.
That's why, okay. Okay.
Explain one disadvantage.
Okay, yeah, that's it.
Yeah.
It increases cost for the business.
Yes.
We go to C.
Analyze one internal source of finance and one external source of finance that you ask to use to purchase a fracking license.
First, you have to define what internal finance is. Internal finance is sourcing for fund within the business. Example of internal finance is the sale of assets. Sale of assets. Yeah, I wrote. I said ES could use sale of assets because it owns some old coal mines which could be sold for money based on the article. ES has some coal mine, old one that he could sell. So when he sells it, it has money. That can make him to finance the purchase of the license.
Clear.
The external source of finance. This is when you source of finance outside of the business. Example is through bank loan or selling of your shares. But ES can sell shares because ES is a public limited company. So that means ES could sell shares to the public to raise capital. That's share capital.
Yeah.
Is it clear?
Yes.
Right. We'll move on, please. We move on.
Germany Theater.
C. Woman figure C. Oh, question C now, right?
Yeah. No, D.
D.
Yes.
Okay. Yeah,
Evaluate how the external stakeholders of AS might be affected by the company continuing to use the packet process.
So first, you have to define what an external stakeholder is. And external stakeholders are those that don't have direct link. They are not directly linked with the business. But whatever happens with the business, it affects them too. The outcome of the business or the decisions of the business also affects them. But they don't work directly with the business.
Yeah.
So example of external stakeholders are the local communities, the customers, they are external. Government, external. Competitors, they are external. So we take it one at a time. For local communities, what is how will decision of ES could have impact on local communities? Here I got. They may be affected by reduction in their prices of their home as their houses becomes worthless. Based on the fracking situation, those that are living within that area people will be scared to stay in that type of area, maybe because of earthquake or land destruction. So price of land in that area becomes cheaper. Do you get the point there? And this affects those that are staying there. They won't be able to sell their land as high as possible. It becomes the value of the land becomes diminished. So the government. What happens with government? Government will gain money from selling their license to ES. Yes or no? And this allows governments to put up infrastructure that will be better for the people. The customers, they may get cheaper energy because that's what ES works on. So getting cheaper energy makes them to have to pay less on their energy, and they might have more income to spend. Competitors, they may find increasing competition, which may reduce their revenue and profit. Now that ES is joining the industry, the rest of the competitors too, they're going to lose customers to ES. Do you get the point?
Yeah.
So whoever is coming to the business, whoever ES is dealing with, or whoever ES is competing with, they have to share almost the same customers because all the customers are here, not in heaven. So they don't have any other customer than those that are within them. So the more business that comes in, the less customers each competitors will have. Do you get the point? Yeah. So that's about all the direct stakeholders, external stakeholders, yes. We go to question 2.
Finally, I'm reading it.
Germany, yeah.
Germany Theater. GTA is a private limited company fully owned by the Germany family. It owns a small theater. This building is used to show live stage performance. Some of the performances are created by GTA and some are created by visiting groups who rent the theater. Table 2.1 shows the planned performances for January 2021. GT gains all the revenue from the performances created by GT. Visiting groups must pay 50% of their total ticket revenue to GT. The theater has a maximum of 2050 tickets that can be sold for each performance. GT uses cost-based pricing to set each ticket price for its own performances. Each performance makes a profit, but the company often experiences cash flow problems. The GT needs to recruit a new theater manager. The person hired will have many duties, including the responsibility for all GT's administration, as well as some accounting. The directors are considering 2 people who were both recently interviewed. Table 2.2 contains information gained from the interview process. Define the term cost-based pricing.
We're talking about cost-based pricing. This is the amount that customers will pay on the products, which the business has included the cost of the production of. You get the point? So here I go. They said cost-based pricing is the amount set by a business which customers must pay on the product having included the cost of production. So the price customers are going to pay. Businesses have included the cost of the products onto it, the cost of producing such products.
Yeah.
So that is cost-based pricing. Clear, right?
Yep.
We go to B.
Explain the difference between cash and profit.
What is cash? Cash is the liquidity of a firm, which it's used to pay debts, bills, and day in, day out activity of the business. That is cash. Then we talk about profit. Profit is the difference between the total revenue of a business and the total cost. Is it
Mhm.
clear?
We could say like cash, what goes out, profit, what gets in.
No,
Why?
cash, profit comes into the business too.
Profit.
Yeah, profit comes to the business.
So I said cash, what goes out,
No.
profit, what goes in.
Cash comes into the business. Yes or no?
It
There's
does.
cash inflow, there's cash outflow.
Yeah, but higher percent of the cash is outflow.
Who says if
It depends. Like in general, this is what we know. Cash is an outflow more than inflow.
a business does much cash outflow than inflow, then the business is going to have cash flow problem.
Cash flow problem.
Yeah, because your net cash flow should be cash outflow minus inflow.
Okay.
Cash inflow minus outflow.
Okay.
So that means if you need to get a positive net cash flow, your inflow must be more than your outflow. Clear?
Okay.
Clear?
Clear.
Or better. Then when you talk about cash, it's basically the liquidity. It's liquid that you can easily spend to pay your bills, to buy assets, whatever it is. That is cash.
Clear.
But for profit is your total revenue minus your total cost.
Yeah.
Is it clear? So move on.
Refer to table 2.1 and any
So
other
go back to table
relevant
2.1, okay?
information. Calculate the revenue detail or received from all performances of A summer dream generator.
So based on the question says we should calculate for a summer dream. A summer dream has 9 numbers of performance were 9, but the total number of tickets are 250. So that means to get our total revenue here, it will be 250 multiplied by 9. Together, that's 250 multiplied by 9 gives us 2,250. You multiply it with the cost, the price. The quantity is 9 multiplied by 250. That's Q. The total revenue is Q multiplied by P. So for P is the price, which is the price of the ticket, which is $40. Then the quantity of the tickets are 250 tickets for 9 performances. 250 tickets for 9 performances. Do you get the point?
Yeah.
So we have 250 multiplied by 9 multiplied by 440. That gives us 90,000. Meanwhile, they said 50%. Look at the third, I think, where, let's see. Where do I have it? Yeah, the first paragraph after the table. They said GT gains all the revenue from performances created by GT. Visiting groups must pay 50% of their total ticket revenue. The total ticket revenue is $90,000. So 50% must go. So that means the total revenue is 45,000. That's 50 over 100 multiplied by 90,000.
Yeah.
That's 45,000. Is it clear?
Yeah.
We'll move on. Woman figure 2.
Explain one possible advantage to GT other than increased revenue for rating or fronting the theater to visiting groups.
When you rent it out, it means that you are able to reduce your cost of production. How? Because you're going to rent out to a lot of visiting groups. Yes or no? That means you can cut your cost. You can cut your cost through all those that are going to visit.
Yeah.
So that means you are having a reduced cost of production. Is that clear?
Yeah.
We'll go on, please.
Analyze 2 factors which might affect the demand for the performance at GT's theater.
That's woman figure C, right? Question C, right?
Yeah.
All right. Yeah, this okay. What are the factors that could affect the demand for a product? We're talking about factors that shift the demand curve. One is advertisement. So if GT is able to successfully advertise its products, the demand for performance will rise. Yes or no?
Yes.
2, price of substitutes. GT has competitors. Yes or no?
Sure.
So if the prices of theater or if the prices of other theaters are lesser than those of GT, you might be losing customers to competitors. Do you get the point?
Yeah.
The third point I make is USP. GT's ability to create product differentiation might increase its competitive edge. So another factor that could increase demand for GT's theater performances is to create a unique selling point. Make a product your services differ from those of your competitors.
Yeah.
That could give you a competitive edge over them.
Yeah.
Population size. If the number of people coming to that environment increases, or if the population is increasing in such environment, that means it's going to have more demand for GT performances. If there are less, it also shifts the demand curve leftward.
Sure.
Clear?
Yep.
So we'll go on.
Analyze two factors which might affect the demand for the performances that GT is creating.
We're talking about factors here. Okay. What? 2D. Please read 2D again. 2D. You're not reading 2D.
Analyze two factors which might affect the demand.
We did 2C. 2D. We just finished C.
Recommend whether GT should employ Nick for Portia for the position of data manager. Justify recommendation.
So
it's just a problem with my laptop. It's not going downwards. I don't know why. So it messed me up.
Okay, it's okay. So we'll go back to table 2.2. We have Nick, we have Portia. So based on the analysis of Nick, the first thing about Nick is that he has experience in the sector. He has experience. That means 3 years working for a similar theater business. That means he has 3 years experience. He has experience in the sector.
Yeah.
That's the first point. He has A-level business. He has A-level in business, art, and Chinese, right? So which means he can help with administration.
Yeah.
Okay. But he doesn't have management experience, which is not something good I do, because GT need managers.
Yeah.
And he won't be able to stay longer there because he wants to move overseas in the future. So he won't be able to stay a longer period of time with GT.
Yeah.
That means he's not going to be consistent. That is for Nick. Then we'll go to Portia. For Portia, she has 8 years experience as manager of the bank. That means she can help with finance. GT is having cash flow problem. So that means Portia will be able to solve that problem. Yes or no?
Yes.
No formal qualification. She doesn't have any qualification, but being a manager for 8 years has covered up for that. Yes or no?
Sure.
Good. She's likely to stay for a long period of time, looking for a long-term career. So she's likely to stay for a long period of time. She was late for the interview. Does that mean she's disorganized?
No.
She might have some circumstances at that point in time. Because if she has stayed 8 years as a manager of a bank, so that means she's always on time. But maybe some circumstances were around that.
Traffic jam or something.
Maybe. So these are what Nick and Portia are about. So you decide whatever one you want.
Yeah.
Thank you.
Welcome.
So that's all about that, right?
Yeah.